Hi, this is Mark with Right Line Trading, and this is our evening newsletter that starts with this disclaimer that all signals and trading opportunities that we provide both orally, written, and electronically are for educational and demonstration purposes only. The company's not responsibility for any profits or losses that may be incurred by subscribers. Most important part is that everyone should understand that trading is risky and that you can lose a substantial amount of money. Always carefully consider your financial position prior to trading, and never trade what you cannot afford to lose. Now, what you're seeing in front of you is a JPEG of the top 10 buys last quarter, and the top 10 buys by last quarter by percentage. Now, this is based on the number. What this JPEG is looking at is the 72 most powerful traders in the world. Now, the 72 were picked by a number of institutions, and if you go through the list, which is present, it is absolutely a list of a who's who list. Now, we all know that insider trading has to be announced. So, and in addition to that, which was something I didn't know, they have to make public their entire portfolio. So the top 10 buys last quarter by these 72 traders was Facebook. Second most was Microsoft. Third was United Healthcare, which has made an enormous move up. Alibaba, Wells Fargo, Aon, Altimeter, Growth Corporation, Visa, Amazon, and Anthem. Anthem's a healthcare company. By percentage, numero uno is Alibaba. Now, this is really a contrarian play, but we know that the biggest investors in the world, the most savvy investors in the world, are, on a percentage basis, are buying Alibaba. And if we look at Alibaba, we see that it's really in meltdown mode. I mean, it is super weak relative strength, and all it's doing is signaling off our system shorts. This is a 20-day look back, but if we change the time frame on this, and go to a daily and go back 6 months, you can see that over the course of the last 6 months, Alibaba has really come down in price. It's come from its high of 274 all the way down to 213. Now, given the fact that we know the biggest investors in the world, which includes Bill Miller and Peter Thiel, and I mean, all the people that you hear about all the time, all the big mutual fund managers, hedge fund managers, have put more money into Alibaba on a percentage basis than any other single stock. This is the play we would look for to make a turn and make it a huge move to the upside. Now, it's not ready yet, and we know it's still on a downward trajectory, but we want it to pull back. The further it pulls back, the cheaper we're going to be able to grab it, and the further underwater these big investors are going to be. It just goes to highlight how these big money players are not necessarily always right, and how calling the bottom is so difficult. Even though they're in the trade, their participation was not enough to lift this trade to the upside. But this is what we're going to put on our watch list, and once we see Alibaba start to consolidate and start making a move up, bring our technical indicators around for a long move, this is going to be on I believe this has enormous upside. If you look at its P to E ratio and its PEG, it's a really a cheap stock, and it's really getting hammered because of China. China just levied a $3 billion antitrust fine against the company, and they really hate Jack Ma, who is its owner. But internet sales are on fire, and I think this is the best company in terms of internet sales, and it's selling at the cheapest P to E and cheapest PEG out there. So we're going to be keeping our eyes on Alibaba as a great turnaround play, where it's going to have tremendous potential upside, potentially all the way back to 274 and even higher. Listen, everyone, have a wonderful evening, and I look forward to talking with you tomorrow.